If you've been stacking silver, what I'm about to show you is going to change everything you thought you knew about this market. Because right now, while most people are watching the price bounce around, something far more significant is happening behind the scenes. And the people who understand what's coming next are positioning themselves very differently than the average stacker. Let me start with a question that should keep you up at night. Why is silver behaving so differently from gold right now? Gold has been making headlines, breaking through resistance levels, getting all the attention from mainstream media and institutional investors. But silver's been doing something far more interesting. It's been coiling, tightening, building pressure in a way that anyone who lived through previous precious metals bull markets will recognize immediately. Here's what most people miss. They look at the gold to silver ratio and they see a number. Right now we're hovering in a range that historically has preceded some of the most explosive moves in silver's history. But it's not just about the ratio. It's about what that ratio represents. It's about the fundamental disconnect between silver's industrial demand, its monetary demand, and its actual available supply. Let me paint you a picture of what's really happening in the physical silver market right now. The United States Mint, the world's largest producer of silver coins, has been struggling to keep up with demand. Not struggling a little bit. Struggling in a way that's forcing them to ration products to their authorized dealers. When was the last time you saw a government mint have to ration a commodity that supposedly has plenty of supply? Think about that for a second. But it gets more interesting. Over in India, one of the world's largest consumers of physical silver, import premiums have been spiking, not gradually increasing. Spiking. We're talking about premiums that indicate people are willing to pay significantly more than spot price just to get their hands on physical metal. Now, why would that be happening if there's plenty of silver to go around? And then there's the industrial side of this equation, which is where things get really fascinating. Because silver isn't just a monetary metal anymore. It's become absolutely critical to the technologies that are supposed to define our future. Solar panels, electric vehicles, 5G infrastructure, medical applications, water purification. Every single one of these growing industries is consuming silver at rates that would have seemed impossible just a few years ago. Here's a number that should make every silver stacker sit up and pay attention. Solar panel installations globally are projected to consume more silver this year than they did last year, which consumed more than the year before that. We're talking about a demand curve that's not just growing, it's accelerating. And here's the kicker, there's no substitute that works as well as silver for these applications. Sure, they're trying to develop alternatives, but physics is physics. Silver conducts electricity better than any other metal. It reflects light better than any other metal. It kills bacteria better than any other metal. You can't engineer your way around the periodic table. Now let me tell you about something that's been happening in the COMEX warehouses, because this is where the story gets really interesting. Eligible silver, that's the silver that's available for delivery against futures contracts, has been on a roller coaster. We've seen massive drawdowns followed by replenishments, but here's what matters. The pattern of these movements tells you that someone, or more likely several someones, are playing a very specific game. They're testing the market. They're seeing how much physical silver they can actually get their hands on when they demand delivery. Before we go further, I want to share something with you. I've put together a free guide that breaks down the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's in the description below. No cost, no obligation, just information that could make a real difference in how you think about protecting what you've built. Check it out when you get a chance. Now, back to what's happening in the silver market, because we need to talk about the elephant in the room. The paper silver market versus the physical silver market. See, for every ounce of physical silver that actually exists in COMEX warehouses, there are multiple claims on that same ounce through futures contracts and derivatives. It's like a game of musical chairs, except instead of chairs, it's actual metal, and instead of music stopping, it's going to be someone demanding delivery and finding out there's not enough to go around. Let me tell you a story about what happened the last time we saw this kind of setup. Back in 2011, silver went from around $15 an ounce to nearly $50 in a matter of months. But here's what most people forget about that move. It wasn't just about price going up. It was about the market structure breaking. It was about the paper market losing credibility. It was about people realizing that the price they were seeing on their screens didn't reflect the reality of actually getting physical metal in their hands. And you know what's different this time? This time, the industrial demand is orders of magnitude higher. This time, central banks around the world are actively moving away from dollar dependence. This time, the mining supply is constrained in ways it wasn't back then. This time, the setup is even more explosive. Let's talk about mining for a minute, because this is crucial to understanding where silver prices are headed. Silver mining is weird. Most silver doesn't come from primary silver mines. It comes as a byproduct of mining other metals: copper, lead, zinc, gold, which means silver supply doesn't respond to silver prices the way you'd expect. When silver prices go up, you can't just open more silver mines and flood the market. The supply is tied to the economics of mining these other metals, and right now we're seeing something fascinating happen in the mining sector. The easy silver has been mined, the high-grade deposits are depleting, the ore grades are declining. What does that mean? It means it takes more energy, more capital, more time to produce each ounce of silver. And in an inflationary environment where energy costs are rising, where labor costs are rising, where equipment costs are rising, the cost of producing silver is going up faster than the price has been rising. Think about what that means for a minute. If it costs a mining company more to pull silver out of the ground than they can sell it for, what do? They slow down production. They focus on their other metals. They wait for prices to rise. And while they're waiting, the supply deficit gets worse. Now let me connect some dots for you, because this is where it all comes together. You've got industrial demand that's accelerating. You've got investment demand that's waking up as people realize inflation isn't going away. You've got mining supply that's constrained and getting more expensive. You've got a paper market that's over-leveraged. And you've got a gold-to-silver ratio that's screaming that silver is undervalued relative to gold. But here's the part that really matters. You've got a monetary system that's under stress in ways we haven't seen in generations. When the dollar was taken off the gold standard, it was backed by the full faith and credit of the United States government and the strength of the American economy. That backing is being questioned now in ways that would have been unthinkable a few years ago. Countries are settling trade in their own currencies. Central banks are diversifying their reserves. The BRICS nations are openly discussing alternatives to dollar dominance. And when people lose faith in paper currency, where do they go? They go to things that can't be printed, things that have held value for thousands of years, things like gold and silver. Except here's the thing. There's a lot more gold above ground than there is silver. The total value of all the gold ever mined is measured in the trillions. The total value of all the silver available for investment, it's a fraction of that. Which means when money starts flowing into precious metals as a safe haven, silver has the potential to move much more dramatically than gold. Let me tell you about what's happening in the ETF market, because this tells you a lot about where institutional money is positioning. Silver ETFs have been seeing inflows that indicate smart money is accumulating. Not the retail panic buying kind of accumulation. The quiet, steady, strategic accumulation that happens when people who manage billions of dollars see an opportunity they don't want to miss. And then there's the central bank angle, which is absolutely fascinating. While central banks have been buying gold at record rates, making headlines, getting attention, something else has been happening quietly. Several countries have been stockpiling silver, not talking about it much, not making announcements, just steadily accumulating physical silver. Why would they do that? Because they understand something that most people don't. In a world where technology and monetary metals intersect, silver is uniquely positioned. Now, I want to talk about something that's relevant if you're thinking about your retirement security. If you're sitting on $100,000 or more in retirement accounts, there's a strategy that more and more people are using to protect their wealth from the kind of monetary instability we're seeing. It's called a gold IRA, and I've put together a comprehensive guide that explains exactly how it works. How you can get physical precious metals into your retirement account without tax penalties, how you can diversify away from paper assets that are vulnerable to market crashes, currency devaluation, and geopolitical chaos. It's in the description below. Worth checking out if you're concerned about protecting what you've worked your whole life to build. Because what's coming in the markets, what's coming in the monetary system, it's not something you want to face with all your eggs in the traditional investment basket. All right, back to the silver market, because we need to talk about what happens next. See, markets don't move in straight lines. They build pressure, they consolidate, they test levels, and then they break out. And right now, silver is in one of those consolidation phases that precedes major moves. The technical analysts will show you the charts, the triangles and wedges and support levels. But the real story isn't in the charts. The real story is in the fundamentals that are building underneath. Think about what happens when silver starts to move, when it breaks through resistance and starts making new highs. The first thing that happens is the momentum traders jump in. They see the breakout, they pile on, they push it higher. Then the retail investors notice. They see silver making headlines, they remember 2011, they start buying. Then the industrial users start to panic. They realize they need to secure supply before prices go even higher, so they start buying forward, locking in contracts, building inventory. And then, this is the important part, then the paper market starts to crack. Because here's what happens in a real silver squeeze. The people who sold futures contracts, who promised to deliver silver they don't actually have, they start to scramble. They try to buy physical to cover their positions. But the physical isn't there. Or it's there, but the premiums are so high that covering their shorts becomes incredibly expensive. And as they try to cover, they push the price higher, which triggers more short covering, which pushes the price higher still. It's a feedback loop that can get out of control very quickly. Now let me tell you about the geopolitical dimension of this, because it matters more than most people realize. Silver is strategic. It's not just a shiny metal that people like to collect. It's essential to military technology, to communications infrastructure, to the energy transition that governments around the world are committed to. And right now, the supply chains for silver are concentrated in ways that create vulnerabilities. A significant portion of the world's silver comes from countries that aren't exactly stable. Mexico, Peru, China. What happens if there's political instability? What happens if there are supply disruptions? What happens if countries decide to restrict exports to secure supply for their own domestic needs? These aren't hypothetical questions. These are real risks that could materialize faster than anyone expects. And then there's the inflation angle, which brings us back to why you're stacking silver in the first place. You're not stacking because you think silver is going to make you rich overnight. You're stacking because you understand that the purchasing power of paper currency is being systematically destroyed. You understand that the money printing, the deficit spending, the monetary experiments, they all have consequences. And one of those consequences is that hard assets, real things, tangible things, they maintain their value while paper loses its value. But here's what's different about silver compared to other hard assets. Real estate requires maintenance, property taxes, insurance. It's not liquid. You can't sell a bedroom when you need cash. Collectibles are subjective, dependent on finding the right buyer at the right time. Stocks and bonds are paper assets, vulnerable to market crashes and counterparty risk. But silver? Silver is liquid, portable, divisible, universally recognized, and has thousands of years of history as money. Let me paint you a picture of what the next phase of this silver bull market could look like. Because if history is any guide, and history is usually a pretty good guide, we're not talking about silver going up 10 or 20%. We're talking about silver potentially doubling, tripling, or more. We're talking about moves that seem impossible until they happen, and then in retrospect, seem inevitable. Think about what happened in the 1970s. Silver went from around $2 an ounce to $50 an ounce. That's a 25 times move. Now, I'm not saying we're going to see a 25 times move from current levels. But I am saying that the fundamentals today are in many ways more compelling than they were in the 1970s. The supply-demand imbalance is worse. The monetary instability is worse. The geopolitical tensions are worse. The industrial demand is orders of magnitude higher. And here's the thing about silver that makes it different from gold. Gold is primarily a monetary metal. Its industrial uses are relatively small compared to its role as a store of value. But silver is both. It's a monetary metal with thousands of years of history, and it's an industrial metal that's absolutely critical to modern technology. That dual nature means silver gets demand from two different sources, and when both of those sources are strong at the same time, the price action can be explosive. Now, let's talk about what you should be watching for. What are the signs that this is really starting to move? First, watch the premiums on physical silver. When premiums start spiking, when dealers can't keep coins in stock, when delivery times start stretching out, that's telling you something. It's telling you that the paper price and the physical reality are diverging. Second, watch the COMEX warehouse stocks. When eligible silver starts draining and doesn't get replenished, that's a red flag. Third, watch the mining stocks. When silver mining stocks start outperforming the metal itself, that's often a sign that smart money is positioning for a major move. But here's the most important thing to watch. Watch what central banks do, not what they say. When central banks are buying gold at record rates, when they're repatriating their gold from foreign vaults, when they're talking about diversifying away from the dollar, they're telling you something about their confidence in the current monetary system. And if they're worried, you should be worried. Let me tell you about the psychology of markets because this is crucial to understanding what's coming. Markets are driven by fear and greed, but more than that, they're driven by the transition from complacency to concern to panic. Right now, most people are complacent about silver. They see it as a niche investment, something for preppers and conspiracy theorists. But that complacency is built on the assumption that the current system is stable, that the dollar is secure, that inflation is transitory, that supply chains are reliable. What happens when those assumptions start to crack? What happens when people realize that the system isn't as stable as they thought? That's when complacency turns to concern. And concern, when it spreads, turns to panic. And panic in markets creates moves that seem irrational in the moment, but make perfect sense in hindsight. Here's something else to consider. The amount of money sitting in cash and near-cash instruments right now is staggering. Money market funds are at record levels. People are holding cash because they're uncertain, because they don't trust stocks at these valuations, because they're waiting for opportunities. But cash is losing value every day to inflation. At some point, that money needs to find a home. And when it starts moving, when people decide they need to protect their purchasing power, where does it go? Some of it will go into real estate, but real estate is already expensive in most markets. Some will go into stocks, but stocks are vulnerable to recession and market crashes. Some will go into bonds, but bonds are getting destroyed by inflation. And some, maybe a lot, will go into precious metals. And when that happens, when even a small percentage of that cash starts flowing into silver, the impact on price will be dramatic because the silver market is so small relative to the amount of money looking for a safe haven. Now let me bring this back to you, to why you're watching this video, to why you're stacking silver. You're doing it because you understand something that most people don't. You understand that the game is rigged, that the system is fragile, that paper promises aren't the same as real assets. You're doing it because you want to protect your family, your future, your financial security from the chaos that you see coming. And here's what I want you to understand. You're not crazy. You're not paranoid. You're paying attention. You're seeing the same things that the smartest investors in the world are seeing, the same things that central banks are seeing, the same things that billionaires are seeing when they buy farmland and gold and hard assets. You're just ahead of the curve, but being ahead of the curve comes with responsibility. It means you need to be strategic. It means you need to understand not just why to stack silver, but how to stack silver. It means understanding the difference between coins and bars, between government minted and private minted, between numismatic and bullion. It means understanding storage, security, liquidity. It means having a plan for what you're going to do when silver does start to move, because it will move. And when it does, you need to be ready. Let me tell you about the end game here, because that's what this is really about. The end game isn't about silver going to some specific price. The end game is about a reset in the monetary system. It's about the recognition that the current system, built on unlimited money printing and ever-increasing debt, isn't sustainable. And when that recognition becomes widespread, when the market forces a reset, the people who position themselves in real assets, in things that can't be printed or inflated away, those are the people who will preserve their wealth. Silver is part of that positioning. It's not the only part. You need food security, you need energy security, you need community, you need skills. But silver is a crucial part because it's money that governments can't control, can't confiscate easily, can't inflate away. It's money that's been money for 5,000 years and will still be money when the current experiment in fiat currency is a footnote in history books. Now, here's what I want you to do. First, if you haven't already, check out that free guide in the description. It's got information that could be crucial to protecting your retirement savings. Second, think about your silver strategy. Are you stacking consistently? Are you diversifying between different forms of silver? Are you thinking about the long game? And third, stay informed. Watch the markets, watch the news, watch what's happening in the world. Because the signs are all there if you know what to look for. And here's something special for those of you who've watched all the way to the end. If you're an American retiree with at least $100,000 in any retirement account, and you mention you watched this video, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just information about how to protect what you've built. It's in the description below, and it's only available to people who take action. The silver market is setting up for something historic. The fundamentals are aligning in ways we haven't seen in decades. The supply-demand imbalance is real. The monetary instability is real. The geopolitical tensions are real. And the opportunity for those who understand what's happening is real. You're stacking silver for a reason. That reason is about to be validated in ways that will surprise even the most bullish silver bugs. Stay focused, stay strategic, and most importantly, stay stacked.